with Seema Modi. Seema.
Brian, this is one of the last industrial conglomerates now splitting into three amid growing pressure from activist investor Elliott Management, who managed a $5 billion stake in Honeywell late last year. Wall Street is focused on Honeywell's highest performing business, aerospace, which makes up about 40% of total sales and will become one of the largest public aerospace suppliers following GE Aerospace. The success of GE, by the way, following this three-way split, no doubt incentivizing companies like Honeywell to use a similar playbook. GE Vernova spun off last April and is up 160% since then. That's motivated more companies like 3M, DuPont to pursue a similar strategy. And then there's FedEx, Intel, Lennar, all on deck to spin off a business in the next year. Activists are expected to accelerate this spin-off trend, with Goldman writing that the new administration may encourage them to push the envelope and pursue bolder demands of companies they hold stock in. The data supports this trend. Spin-offs tend to outperform the market by 10.2% 2 years after completion, while parent companies underperform on average by 8%. That's according to Morgan Stanley, guys.
All right, let's kick this around. Seema, stay right there. And Brian, she's looking pretty good in your chair. I don't want you to get nervous. But Honeywell is following GE's model, hoping for some of this spin-off magic, a trend even our parent company Comcast is looking for as well. And there's something to it. Check out this data from Wolfe Research. Over the past 10 years, spun-off companies averaged 13% returns in the year after the breakup, while the parent stocks returned 11% or so on the one-year average. Additionally, and this is interesting, parent companies have a strong tendency of becoming potential M&A targets. Let's bring in Chris Senyek. He's the chief investment strategist at Wolfe Research. And so that leaves a number of firms to keep an eye on, potentially, Chris. But before even going down that route, what's remarkable to me, the value of General Electric today is 4 times greater when you add up all the spin-outs than it was before they spun out. So that's, I imagine, why we could see more of this.
Yeah, hi, Kelly. Thanks for having me on. Yeah, the GE one last year was just a blockbuster. And anytime there's a significant transaction where the sum of the parts is greater than the whole, you start to see other companies follow. Our spinoff basket, in fact, is up 79% since the beginning of 2023. It was up 33% alone last year, beating the S&P 500, which, as we all know, is very tech heavy. And a lot of spinoffs aren't in the tech sector, and that basket's continued to perform well, up 6% year to date. So I think the spin trend is going to continue as long as the performance stays strong.
Seema, all of that said, Honeywell's down 5% today. It's not getting much of a lift on this.
Yeah, it's interesting. I think in addition to announcing this news that they're splitting into three, Kelly, there's also guidance for 2025, which came in weaker than expected. But I think its underperformance today does raise the question that how much of a spin-off success is tied to the speed at which the deal can be done, because this split is not expected for 18 to 24 months. And RBC Capital was saying that, the upside could be limited until the spin is actually, we have an actual date. So that's something to keep in mind as we watch shares down about 5.6.